Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the ultimate volume profile trading strategy, a powerful approach that can significantly enhance your ability to analyze markets and predict price movements. By understanding how volume interacts with price level, you will gain a deeper insight into the market sentiment and identify key areas of support and resistance. So as we explore this strategy, you will learn how to use the volume profile to refine your trading entries and exits, ultimately improving your trading performance. So stay tuned until the end as we will break down this complex tool into an actionable tool that you can use and that would affect and you can apply to your trading strategy day to day. Now we are talking about the volume profile. The volume profile is an advanced charting tool that provides a detailed view of trading activities by displaying the total volume traded in each price levels over a specific time period. This is basically what the volume profile indicator is all about. Now, the volume profile offers unique perspective by mapping volume against price. The first key point we need to know about this volume indicator is the point of control. The point of control is this price level is where this price level is typically where the highest volume of trades are being traded. Now, if we look at this area, this is called the area of the point of control, where the highest number of volumes are being set out. I'm trying to set my volume area indicator. Very good, it has been set. So this is our point of control. This line in the middle is where the highest number of volume trade occurs, and it often acts as both a significant support and a significant resistance zone. This is basically what it acts as. So let me change the line color to probably red so that we wouldn't make certain mistakes when trying to differentiate between its high and its low. So this red line in the middle is typically what is known as the point of control. Now, the value area is basically this area where trading opportunities happen. It is a price range where specified percentage of trading volume occur. It identifies typically 70% of trading volume occurs in this area. It helps identify where most price agree between buyers and sellers to take place. This is basically what it's about. Now we also have the high volume node. The HVN is the high volume node. This is the high volume node. This area is with significant trading activity, which acts as a gravitational force that attracts price movements. While this is the low volume node, this downline here, and this is where areas with minimal trading activities take place. How the high profile works, let's see how this indicator or this particular high volume instrument works. It helps traders to identify critical price levels where significant trading activity has occurred. This level often serve as strong support or resistance levels or zones, providing valuable insight into the market structure and liquidity. This is basically what we are talking about. These are areas where high volume occurred in the market. This is the high volume node and the low volume node. Basically what we are talking about. What's going on with my chart? So let's see how the ultimate volume profile trading strategy works. Let's see how we can apply this to our trading strategy. First of all, you have to identify a level. We will identify a level we want to use, and this is basically what we are going to do. After marking out a level, we assume that we are going to make use of this level and we'll identify this level. So after identifying the key levels, this is my key high and this is my key low, we begin by marking out our point of control. We mark out our point of control and the value area on the chart. It is basically what we are going to do about this chart. This is my volume, this is my volume profile trading strategy. I've imputed this fixed range volume profile on the chart. It will mark out automatically the point of control on my chart. The point of control is the price level with the highest traded volume, where the highest traded volume is at. Acting as a magnet for price action, as you can see how it's magneting price, it pulls price towards that area. It serves as a strong support or resistance level. Presently is acting as a resistance level. This value area represents price range where approximately 70%, and this is the price area, this area from this high to this area is approximately where 70% of trading volume occurred, indicating market fair value zone. So this is typically what it is. And the second step, first of all you have to determine the trend. You analyze the distribution of the volume across different price level to determine the market trend. And you can see from the market, you can see that market is trending to the downside, but it's breaking structures. So marking out this area further tell us that from this high to this low, this is typically where much trading activity occurred on the chart. This is how we can do this. It helps us to align your trade with the prevailing market trend. The next thing we need to do is to enter our setup. We'll look for good opportunities to enter the trade based on the interaction between price and these key levels. After drawing out our fixed volume range, after drawing it, we can notice that it has marked out an area where much activity occurred. And remember that this value area, this from this high to this low, is the value area where 70% of trading activity is done. So this is the area where we are expecting to enter this particular trading setup. So for example, if price pulls back to the value area high, this high here is the value area high, it can be a good entry point for a sell trade. Then if price pulls back to the value area low in a long position, it means that we can buy from this area. So this is the area we'll be looking for to enter our sell position. So you can basically enter your sell when price gets to this value, the high value area, the high volume node, this high volume node or this high volume area. This is where you can probably enter your sell trade. When price breaks above and breaks back in, you can enter your trade in this position. Remember that risk management, you have to set your stop loss below the high value node in a long position, and for short position you place it above. You place it above the high value node. This is where you place your stop loss. Just to manage your risk, always place a stop just before you enter your position, after you enter your position, to secure your trade from losing more than expected calculated amount you are meant to lose. Now for our exit strategy, you can take partials as price is going to the next significant high volume node area. The volume node area, either the low volume or high volume, but in case of a selling opportunity, when price is getting to your low volume area, this is where we would want to take partials. We can be taking partials in anticipation that price might break this area. So you take partials and you trail your stops to lock in gains as price action moves through the low value area, allowing you to maximize on your trading opportunity. Now let's look for an example in a bearish scenario where we are trying to take a trade using a bearish setup. And as we can see in this area, this is probably the best example when price broke this structure at this point. This is a structure break signifying that price is in an uptrend. We draw our indicator from the low to high or the high to low. It will mark out areas where probably the highest amount of volume occurred, and to take this trade we would need to expect price to get to our areas. You can take it from the volume high, because this would basically act as a support or a resistance in the market. But since price didn't go deep, did not come as deep as we expected it to, we can make use of this area that is now the high volume node. This high volume node can act as a resistance or a support in this trade. It will act as a support since we are in a bullish trend. So when we see maybe our candlestick pattern at this area, or when price breaks above this area, this is where you want to capitalize and come and enter your position. Remember to put your stop loss just below that area or below the swing low, as the case may be. And you would want to trail your stop loss. You can trail your stop loss, or you can go for a fixed ratio of 1:2 or 1:3, as the case may be. Another application of this strategy is using the multi-time frame analysis. You can use your longer time frame, such as your daily or 4-hour time frame, your weekly, your monthly time frame, to identify the overall trend in the market. Then we zoom in into the shorter time frame before we apply this to our chart. We can start by identifying on the daily time frame. We assume that this is our daily time frame. As you can see in our daily time frame, price broke this structure in this area, signifying that we are in an uptrend in this area. This is basically what we are talking about. Price has retraced and we are trying to take a trade. We are trying to take a buy trade in this area. So this is basically what we can do. We will go to our daily, or we will go to our 4-hour or our 1-hour time frame to better understand what is happening in that area. Then you can get a precise entry when price gets back to that area that we are looking at. This is the area we are looking at on chart. From the daily time frame, this was where price broke the structure, and we are expecting price to retrace to this area. This is where we are expecting price to retrace to this area. If you decide to draw your indicator or your technical tool from high to low on this particular chart, it will show you an area where you expect price to buy from. This is an area you expect to be. This is your volume, your low volume node, your low volume node. This is where we expect to act as a support or a resistance, but in terms of a buy trade, it will act as a support. And we see how price broke through, came back, broke above, and came to retest. And we can see that even while price is coming to retest this low volume node, it is coming in terms of, it's coming with an approach of making series of higher lows and higher highs, still complying with the technicals of market structure, higher highs and higher lows. So in this case, this is where we would want to enter our buy position. When price has come back to retest this support area, we can enter our buy position. When price has retested and is about going, we enter our buy position, put our stop loss just below the resistance, just below the support area, this low volume node, and we can trade in alignment with the direction of the chart. Can trade in alignment with the direction of the chart. This is how we can use the multi-time frame approach to refine our trading strategy and improve our trading accuracy. You can still decide to make use of this volume area tool to mark out your lower time frame area to see areas of higher trading volume. And as we can see in this area where we marked out, you can see that price came to the point of control, then it reversed at that area. It also came and wicked at the low volume node before it reversed. This further increases our confidence in taking this trade, that this is an area of significance that you can buy or enter your trade at this area. This is how we can capitalize on this trading strategy. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you would not miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.